Chris, how many years have you been in the insurance business? Because I think you just recently celebrated how many years?
Well, last year when I had my anniversary, it was 10 years. We're going into my 11th year this year, but I have 13 years of insurance experience. In the mid-'90s, I did work for Allstate in the mid-'90s in underwriting.
Doing?
In underwriting.
Really?
In underwriting, and I had to utilize that underwriting to help me what I do now, because I understand how the oncomings and the different things that they do within underwriting, how it relates to, what I do on a day-to-day basis now as a sales agent. So I know the things they're looking for, the pitfalls and things, but will help my customers, when they're trying to write a policy or I'm trying to write a policy for them.
So let me ask you this. I know we think, having that insurance card, like we completely covered. Like, if the card is or the policy is active, even if we get stopped, we flash that card, right?
Yeah.
But that actually means that we fully are covered, or what's the biggest false sense of thinking that we got full protection?
Well, I'm gonna explain this false sense. So theoretically, a lot of times when you get pulled over, they know if you have insurance or not when they run your tags.
Really?
Yeah. So I'm gonna say 9 times out of 10. It might be an occasion here or there where, it might not pull up, but 9 times probably out of 10, once they run your tags, they already know you have insurance or not. Now, the fallacy about the insurance card, now, if you paid your insurance up, that card can be deceiving from a standpoint. You can show somebody a card, but if you hadn't paid your insurance, although you got that card and it shows that it's active or it has an expiration date, maybe not until September, if you had made your payments, of that magnitude, and you had done what you're supposed to do, and then you don't have coverage, then you'll be in trouble.
Really?
Yes.
Okay. So, you mentioned previously you started behind the scenes as a underwriter before becoming an agent. So, like, what were you seeing back then as an underwriter that you said, okay, if I ever go out here as a, agency owner, I know, how to better protect my clients?
Well, one thing that's different from when I was in underwriting back in the 90s to now, we had a lot of autonomy. The underwriters were the ones who were making the decisions. Now, with most companies, they don't have that autonomy anymore. They pretty much have their set guidelines, and you have people who work in underwriting, but with AI and all these different systems, pretty much it's preset, and they don't deviate from that. Where I used to make a human decision based on somebody's situation, they had some kind of life, altering situation or something like that. I could take those kind of things in consideration. Now it's pretty tough now because they pretty much just stick to those guidelines, and that's pretty much it.
So, like you said, life-altering situation. Like, what's something that you can remember that you saw, but yet you said, I can still approve this policy?
Well, or it might be a situation where somebody lost a job.
Oh, okay.
Where maybe I can extend some payments out, or if somebody's policy canceled for the same reason or something happens that was kind of catastrophic, I had the autonomy to, if it was a good risk to, make a decision to, especially I would look at their history, of course, first and foremost, see what their track record was. Now, they had a bad track record before anything catastrophic happened.
Right.
I might not have done it, but if I saw they had a solid track record up to that point, and then something catastrophic happened, then I would make concessions in regards to that.
And so you spent how many years in underwriting?
2 years. 2 years.
2 years.
Uh-huh.
And so what was the deciding factor for you to say, okay, I got my experience behind the scenes, now I'm ready to go, out on my own and have my own agency?
Well, it was a little bit of a gap between there, so that was the mid-'90s. So
Okay, what?
It was a little bit of a gap. So I was doing extremely well in underwriting, but in fact, they used to always tell me, they said, Chris, you're a salesperson in underwriting. So I had a heart for the agents, because I wanted to make sure the agents were getting the full capabilities to make sure that customers were getting taken care of, Because sometimes you have some agents will call up there trying to get stuff pushed through they knew shouldn't be trying to get pushed through, stuff like that. Of course, I didn't, recognize that, but you have some solid agents out there who were really, trying to do the right thing. And I want to make sure I was a strong support system for those agents that were out there. But the thing was, again, like I said, they said I was a salesperson in underwriting, and it just wasn't my forte at that particular time. And I had actually thought about becoming an agent back then. However, the company was not agent friendly, so they didn't have systems in place that I thought were going to be conducive to be an agent. So that's why I looked at alternatives, and that's when I ended up going into pharmaceutical sales for almost like 15 years.
Really?
Yeah, 15 to 16 years.
And then after that, so what? Because I mean, typically people who's in pharmaceutical sales, they either retire or die. I mean, you know,
Well, they retired me. So the thing is, they had started laying off, probably like 2006, 2007 time frame, but I made it all the way probably to 2014, and when they had those layoffs, and it was time for a change. I was actually, to be honest with you, I was ready for a change, and God knows what's best for you, because in my mind, I was like, I want to get laid off. I want to get this severance package so I can do something else,
right?
But the thing is, I had said that like many moons ago, like I said, that 2006, 2007 time frame, but 8 years later, I was still, 7 to 8 years later, I was still there. But like I said, God has a plan, and everything worked out, because I did start some other businesses while I was during that time frame. So I had the salon suites that the wife and I had started, that we had for 10 years. I had a cell phone store. So I was able to do some other things, entrepreneurial, that, were very beneficial.
So with this, what made you get into the salon suite business?
It's funny, because a lot of people used to always ask, they said, does your wife do hair? Are you a barber? I said, no. From a financial standpoint, looking for another revenue stream,
right,
another tax break, as well. So we looked into it, and we looked at different franchises at that particular time, like I think Massage Envy and some of these other franchises that were out there. However, with those franchises, they had so many restrictions. And of course, by us starting our own thing,
right,
the guidelines, the premise of how we wanted the business to run, the vision,
how to
and
do
the goals,
marketing and advertising,
stuff like that. Yeah. We had control over that, and that's something that was really appealing to us, and so that's what we ventured out on our own.
And that was in the early 2000s?
That was from 2007 until 2017.
And look how popular they are now. Like, so was it like in that time frame? Was it just kind of that type of model was just starting?
No, that model had actually been around for a while.
Okay.
In fact, it was funny, and it probably within literally about a half a mile to or less than a mile radius, there were about 3 or 4 salon suites in that area. And the thing is, like I tell people, like with the insurance business or any kind of business out here, whether it's dentistry, real estate, insurance, any kind of business, it's so many people moving to the metroplex. There's enough business out there for everybody,
right?
And although you had that many salon suites in a close proximity of one another, we stayed pretty much at capacity the whole time.
Really?
Yeah. And what made a difference for us, I said, I treat people like I want to be treated. I like to be treated extremely well. And my tenants, just like my customers with Allstate, I treated everybody like family. And I had the same premise when we had the salon suites and the different businesses we've done. That's just my mindset.
So here recently, I was reading something on social media.
You're reading?
Yeah, I read sometimes.
Okay, all right.
Yeah, I read. Well, I put Audible in, but not. In Houston, Texas, they were saying a lot of people were dropping their insurance. So what's going on with the market right now?
Well, the market, insurance is skyrocketing. Whether it be home or auto, one of the main reasons for home insurance going up, and it's been an ongoing problem, is nothing new. It's just getting worse and worse. So you just think about it. I like to use an analogy. I think I've used this before when we were talking. I said when we first moved to McKinney in 2000, I'm just gonna make up a number. Say it was like 30 people in McKinney. So just say you were paying $1 per claim. That's $30.
Right.
So just say fast forward 20 years later, and you got 2,500 people at a dollar. It's $2,500. So more and more people are coming in. So more and more claims are being filed. So that's just kind of raising. Even before these tariffs were intact, it was already bad. Trying to get supplies and materials and things like that, labor. But the tariffs, have even made it even worse. I think people have a false premise of what the tariffs were supposed to be like. And people don't realize that the tariffs will come back to the consumer, and that does affect the home buying process, affects the claims, even with auto. Sometimes people are like, I got this old beat up car, Why is it costing so much for an older car? It's hard to get parts for the older cars. So those are the kind of things people don't take in consideration, and that's what's causing it and driving the price of insurance to go up, claims, materials, and things of that magnitude.
So, people are big on, shopping for price, right? When it comes to insurance. But what, in your professional opinion, Chris, what do you think we're sacrificing when we're shopping for price to save a few dollars a month?
Well, like I always tell people all the time, people call me cheap. I say I'm frugal. You should try to save money. However, don't save money at the expense and not getting the proper coverage that you have. So that's the key thing. You want to make sure that you have the proper coverages. And sometimes you don't need it until you need it. And that's sometimes what people run into. They'll try to scam on the home insurance. They'll try to scam on the auto insurance, trying to get something cheap. But then when something goes wrong.
Do you think it's both the customer and the agent? Because the agent trying to, create a quick sale, so they just kind of.
Well, you've been around me for a long time, and people who know me, I always say I'm a consultant, not a salesperson. I'm gonna give you what you need, not what you want. And in fact, if your want don't meet the need, I professionally tell somebody they might want to look at some other options that are out there, because you do have a lot of agents that are out there that they're pushing, they widget pushing, they're trying to just sell. Somebody might have a $500,000 house, and somebody might say, "Hey, can you just insure it for like $300,000?" Somebody just might do that, because they're trying to make a sale. I'm not going to do that because I want to be in a situation. I want to sleep good at night. Even if the person says they want that, sometimes you have to save people from themselves sometimes. And I'm not going to be in a position to where they got a $500,000 house, I give them $300,000, and somebody will not give me that $300,000 if something go wrong. But yeah, where you going to get the other $200,000 from? And the thing what you're going to find out a lot of times, you might have to dip into some other, resources, financial resources to make up that difference. So it might be your savings, your 401k, like life insurance or something like that. So you're pulling funds away from something else that was allocated for your retirement or for another catastrophic situation to get that house. So now, did you use that other $200,000 to get where you needed to be to offset that $500,000? You got it. However, you put yourself in a position later on down the road where you're not going to have the finances you need for your retirement or whatever else might come up that you had planned for.
Chris, share with that situation. I was at your office one day. You was talking to a customer, and I don't know if you were doing a review or she was calling to, she was checking around, but you noticed that there was a gap in her policy, or what was that about?
Well, it was actually the opposite. She had more coverage than she needed. So I asked her the question. I think her replacement cost on her house was like $350,000, and she had coverage for $700,000.
Really?
So yeah, for $700,000. So I asked the question. I said, is there any reason you have $700,000 worth of coverage on your house? I said the replacement cost value is only $350,000. So I was in the impression maybe it was the insurance agent that had done that for her. They did it, but they did it based on, once again, that's what she wanted. That's what they gave her. They just should have had a discussion with her, telling her, though, although you have $700,000 worth of coverage, it was only going to pay $350,000. So she was paying premium for $700,000 when she should have been only paying for like $350,000 worth of premium. And so that's the thing. Like I said, it's a misnomer. She was under the impression that she thought it was going to be a come up. She said if something wrong with her house, she thought, although my house is $350,000, I got $700,000, something goes wrong, she thought she was going to get the difference. But somebody should have taken their time to explain that to her, what that situation would look like.
So even in a sense, I mean, could it have been possibly that the agent wrote it because the house would, increase in value, or it doesn't matter?
In that case, it just shouldn't have been written that way. It was
really,
yeah. Like I said, sometimes you don't want to be underinsured, but you definitely don't be well overinsured either if it doesn't make sense.
So when you're reviewing policies, Chris, like what are some of the most interesting things you see in our coverage that you see the gaps?
Some of the gaps that you'll see. Well, with me personally, I don't see those gaps. I make sure people have it. But when people come to me, like
somebody that's
Well, there's like that situation we just talked about just then, or somebody might not have, the right amount of coverage for, property damage for their vehicle in the case they're, in an accident.
So give me an example of what that would look like.
So what that would look like, just say somebody might have a car that's $60,000.
Okay.
And for the property damage, somebody might only have coverage for like, $30,000. You want to make sure that you have the right amount of coverage for your car if it's in an accident or something like that.
Total. So
you have ranges. You have your state minimums 30, 60, 50, 100, 100, 300. Most people do 50, 100, 100, 300 because on average, the average car on the road is probably about, I say between $45,000 and $50,000 on average. Now, of course, you got some cars that out there that are more. You got some beaters out there too. So
Chris, because this 2026, like the average car note now is $1,000 a month. So I haven't seen a $40,000 car in a while. I mean, they like 50 and up now.
I said the average, but everybody's not driving a brand new car. Like you said, you got some people who drive
like pre-owned or something like that. Still,
that ain't necessarily pre-owned because pre-owned can cost too. But I'm just talking about you have some people who have older cars out there. So on average, the average car costs probably about $45,000 to $50,000 on average. But once again, you got some people who have cars probably cost $150,000, but then you probably got somebody who got a car that cash car. Yeah. So we're looking at an average.
So at what point will you all only do not full coverage but
liability?
Liability.
So the discussion I have with customers when it comes to liability is this. First of all, in order to get liability, the car has to be paid for.
Okay.
Because sometimes that's a misnomer. Sometimes people have as well. They think, well, I'm not going to be paying all this insurance. I'm just going to do liability. If the company that's either leasing your vehicle or financing your vehicle finds out that you don't have the right coverage, they will force place the right coverage is on there for you. And if they force place it, it's going to be expensive.
Really?
Because they want to make sure their asset is being protected.
Okay.
So, it's different cases and different scenarios that I'll look at when it comes to auto insurance. Of course, the cars have to be paid for first and foremost. And then I just ask questions too, I let them know. And I make sure they get uninsured motorists too as well, because if you do liability, in my professional opinion, you should have uninsured motorists, meaning that in the event somebody hits you and they don't have insurance, you're covered. Now, some people just want strictly liability. They just trying to go bare bones minimum. In that situation, you just have strict liability. It only covers you if you hit somebody else. Now, if your vehicle is messed up or torn up with just liability, yours isn't covered. The other person is, but yours isn't. So you're going to have to start from scratch and try to figure it out and get another vehicle. So there's also some things I look at from that standpoint.
Okay. Now, everything I'm asking you, Chris, has nothing to do with your customer. These are people who are, they're moving around trying to find policies, right?
Exactly.
So my question is this. We always say we have full coverage. What does that really mean? Because in the event something happened, for some reason we don't have, it's something that's missing. So you see, I'm even getting passionate because I done been down this road, man. Like, agencies would say, oh yeah, you got full coverage. And I'm thinking I have full coverage, and then something happens, oh, you don't have that. Which you said, but you don't have that. But you say I had full coverage.
What constitutes full coverage? People don't realize it if you have comp and collision. Simple as
that.
That's it.
But then, Chris, so I feel like, and this is not you, but I feel like we out here being misled, man.
It's not that you get misled. Some people think when you say full coverage, they think about like roadside towing. Yeah. That's kind of like bells and whistles, but full coverage means you have comp and collision. The other ones are kind of like extra add-ons. You do need them. And I always suggest people to get those add-ons like your towing and roadside because, like I said, you don't need it until you need it. Usually it only costs like about $6 a month,
Well, what about accidental insurance coverage or hospital? When do we need to use that? If somebody is uninsured and hit us and...
So, clarify what you're talking about when you said it.
Okay. So there was I thought I had full coverage, right? Which I guess I did based on what you're saying. However, the person who hit me, they didn't have coverage. So, of course, I had uninsured motorists, right?
Right.
That is important to have.
Correct.
Because it acts as a bumper from going against filing a claim on your policy. Am I right?
Yep, exactly.
Now, when I went to the doctor, they were wanting payment up front, right? Because I didn't have, but it's something that pays the
personal injury protection or medical.
Yeah, medical. Yeah,
you get medical and you have personal injury protection. I don't want to get too deep in that because I'm not a claims person.
I mean, just give a
surface wise. So what personal injury protection does in the event that you're in an accident and you get injured,
right?
Protects you and the people in the vehicle up to a certain point.
Okay.
You know, and medical does the same thing, except let me back up. But also with personal injury protection, if you miss work for some reason,
really,
it pays a certain portion. But if you exhaust that personal injury protection for the medical stuff, there's nothing left for the, if you, job loss time or anything. I mean,
but the fact that we could have had that.
Yeah. And then medical is cheaper. It doesn't give you the coverage for if you're trying to lost wages and anything like that. But a lot of times it's cheaper, from that standpoint. But it's nothing real large amount of money, but anything can help because you have different ranges for different companies and stuff like that. It does help out to have that. But like I said, the biggest portion is going to come from your personal insurance that you have, your personal insurance.
Okay. So, Chris, here's another one. All right. So we get into, you said the state minimum, right? All right. So we typically get the bare bones sometimes, right? Or what's required. But when something happens, again, we think we got full coverage, right? Something happens, and now we don't even have enough to, cover the vehicle, cover the people that were hurt, because let's just say, the bodily injury was only.
I'm gonna cut you off real quick. I'm gonna tell you like this.
Go ahead.
So, like you said, the state minimum, 30, 60, it's full coverage. You got comp and collision. However, if you got 30, 60, meaning $30,000 worth of insurance, if you hit somebody,
right?
If it's $60,000 worth of that needs to be paid out,
right?
You got to make up that gap.
So that means that they can take us to court and sue us.
Yeah, potentially, yes.
Man, we out here riding dirty. Literally. We think we're riding clean, but man, we in situations that we don't even know that can happen, and there go the lawsuits.
Exactly. I mean, potentially could happen. Yeah, potentially.
Well, now, Chris, I see more injury lawyer billboards than I see anything. So that kind of tells me Texas is pretty known for, these accidents.
Yeah, I mean, I think like the Dallas-Fort Worth area, I think we're in the top 5 for. Accidents in the country. Really? And Houston is up there as well.
So does that shoot up the premiums too?
Oh, most definitely. All that stuff shoots up the premiums, because then when you get attorneys involved and things of that magnitude as well, all that stuff factors into it as well. So I always tell my customers, let the insurance company do what they need to do first before you start, looking at those other avenues. Now, then once you've exhausted everything that you can through the insurance, then you might want to look at some other, options or something like that. But always let your insurance company do their due diligence before you start, seeking out other things. But that's a personal choice that somebody would have to make. That's just my professional suggestion, but people still going to make their decision what they think is going to be best for them.
Okay, so, whenever I'm at your office, I always hear you say this when you, issue a new policy. And I want to know, why do you say this all the time? If something happened, call me first. Yep. Don't call them. Why do you always say that?
But people don't realize. I say call me first. If you're in a car accident, I say call the police first, then call me. It's 2 reasons I say that.
Go ahead.
The first reason you want to call the police, you want somebody official coming out there to take a look at it and see what's going on.
File a report.
Okay. So you can have documentation to have an official report. The reason I tell them to call me second, because when people are in an accident, the adrenaline's going, they're frazzled. Their mind is going 50 million ways. So I want them to be on the phone with them to kind of walk them through what they need to do. Get the other person, especially if the other person's fault. Get that person's driver's license information. Get their insurance information. Take pictures of the damage on your vehicle and their vehicle. So I just kind of want to walk them through all those kind of things like that. So, because when you're in that accident, a lot of times people not think about those things because, like I said, their adrenaline's going and they're flustered. So I want to be there to be the buffer. And I'm probably different from most agents. I put my cell phone number on my cards. Heck, even like my social media stuff, people ask me, they said, is that a Google number that you use on your social? I said, that's my personal cell phone, And I just want people to be able to get in contact with me directly. That's just me. And the reason I'm like that, I like that for myself when I'm working with people. I have a business dealings I'm doing with somebody. I'm trying to get business from somebody else or do business with somebody else. I want to be able to get into contact with the person. I like personal relationships. I like that personal feel, that personal touch.
So here's something else I hear you do when I'm at your office. And people call and you go, you answer the phone, they go, yeah, I need a quote. Mm-hmm. And you, instead of getting the information, getting a quote, you say, do you mind sending your policy over so I can review the policy? Uh-huh. Why do you do that?
Well, I want to make sure that we're comparing the apples to apples, so it won't be a discrepancy in the coverages. So I want to make sure I'm matching their coverages. First and foremost, I want to make sure they have the right coverage, what they have there, and want to make sure that I'm doing the same thing and doing my due diligence with my policy. And as you know, even with me, even if I don't get the business, I'm different from most agents. Most agents, if they don't get the business, they probably like, hey, good luck. I hope it works out for you.
Right.
I'm still going to look at that policy for you, even if I know I couldn't get.
Really?
I still look at it. Just want to make sure they going in the right direction. They understand. And I'm going to backtrack a little bit too. Another reason I tell customers to call me too when it comes to home insurance, just say if a hailstorm comes through, one of the reasons I want them to call me first is, first and foremost, one, you need to meet your deductible, and two, you want to make sure it's a covered loss. People don't realize if you call the insurance company directly, that's going to be a claim automatically, no matter what. And somebody's like, well, nothing was paid out. That's considered what they call a zero pay claim. Although nothing was paid out, you still get charged.
It counts against you.
It still counts against you. So those are the two reasons I want them to call me first, so they can reach out to a roof or a contractor to come take a look and see if it's enough damage on that roof. And if it is, then they can call me and say, let's file a claim. If it's not, we won't. So that's what's very important from that standpoint.
So, what in your opinion, Chris, what do you think is, that one thing that's buried inside our policies that most of us don't even know about, and it could be like a financial disaster later.
Well, okay. Once again, a lot of stuff is right there in front of you. So I take my time and go through all the coverages with my customer. In fact, the information I send out to my customers, even if they forget, although I go through it at the very end, everything I explain to them is actually at the very end. It tells exactly what I went through. So they got a Cliff's Note version of what I talked about. But I always tell them, if you still don't understand it, reach out to me. Like, once again, you want to make sure that you have the right deductibles. Once again, a lot of times people trying to sell, and they'll give you these high deductibles. People give you what you want. I want a cheaper premium. The higher the premium,
which creates a financial disaster.
Yeah. So the higher the deductible, the lower the premium is going to be. But then, you don't want to have a 5% deductible on a $500,000 house, because that's going to be a $25,000 deductible. Yeah. So a lot of times people don't realize that until it's too late. I've had customers, when I do renewals and I look at it, well, Chris, I'm looking at X company and they're cheaper than you. And the first question I always ask them, I said, what's their deductible? And they'll look and they're like, oh man, that deductible's a lot higher than yours. It's not that much less. It's way higher than yours. That's why I say, you don't know what you don't know. People get so indoctrinated, once again, to try to get a low rate. They don't pay attention to details. A lot of times, they just hear that low number and they get the blinders come on.
So, Chris, you got to share this. It was that time. I guess it's been a year. It was a year ago, and I was at the leasing apartment because my daughter's getting her own place, right?
Mm-hmm. I got to call her back today too.
Huh?
I got to call her back today.
Okay. And so the leasing agent was, was pushing their renter's insurance policy.
Right.
And I think it was something cheap. And so
Right.
I said, Kyler, you call Chris and get a thorough understanding on renter's insurance. I said, because
AKA Scooby.
right, aka Scooby. I said, because a lot of times these apartment complexes, the renter's insurance is cheap, but what's the story behind that, Chris? And that people who are, that has renter insurance, what is that we don't know?
Well, it depends. Sometimes it could be comparable. In her particular case, it was only going to protect their stuff. Her personal property was not going to be covered. So that's why I said it was cheaper in that particular case, but it wasn't going to protect her personal items. So when I looked at it, I was like, the reason you don't want to go with that one is cheaper, but it's not going to cover your items if something were to go wrong. So something as simple as that. And sometimes people get hung up like that until something goes wrong, and that's when they realize
they don't even have
until something happens. And the importance about renter's insurance too is usually pretty inexpensive. And the thing is too, with renter's insurance, it protects your belongings. And two, just say for instance, if you're in an apartment and say for some reason it's a fire there or the pipes burst and you have to be displaced and move somewhere else, the renter's insurance affords you financial allocation to, we call it additional living expenses to go somewhere else. So it might be a situation where you have to go find another spot, another apartment or Airbnb, and also take care of like your food and things like that until you get back on your feet to where you're trying to be.
I'm going to tell you why I said you need to call Chris. This is when I was living in Little Rock, Chris. There was a fire that engulfed the apartment complex, right? And you know how the media come out and they said, so what happens now? And they were saying, well, we thought we had renter's insurance, but it only covers the building.
Right, exactly.
And so we don't know what we're going to do. So those are the situations that people are in, Chris,
Exactly.
because it didn't cover their belongings. It didn't put them in a hotel or something until, for whatever the amount of days that they can do it. That's dangerous, man.
Right. That's important, like I said, is to make sure you have the right policies. I was talking to a customer earlier today, and she's like, she wanted a landlord policy. So I was like, okay, it's not a problem. I said, are you going to be leasing this out to somebody else, or what's the situation? Because I only see one address. I only written one policy for you for this one home. She said, well, no, it's for my house. I said, well, are you going to be moving somewhere else, like an apartment? You getting another house? She said, no, I'm going to be here too. That's not what a landlord policy is for. If you're the owner of the home, you can't write a landlord policy. A landlord policy is like, say, for instance, if you were trying to come into my, my building, I'm not living there for a tenant. That's what that's for, So you want to make sure you have the right coverage for that as well, because even with a landlord policy, what's great about that as well, say, for instance, once again, like a pipe burst or something like that in the house and your tenant has to move out, they'll give you fair market value for the rent that was being paid, while you're getting the construction and getting everything back together. Now, that tenant should have their own renter's insurance. I've seen this happen too, because I had a customer just recently said, hey, pipe burst in the house. My tenant says I need to find them another place. I said, well, that's not up to you to find them another place. They have renter's insurance. Well, they said they don't have renter's insurance. I said, unfortunately, that doesn't fall on you. That's on them. They're going to have to find a way, unless you just want to be philanthropic and do something for them. But
Right.
that's on them, because even though they were leasing or renting from you, it's their obligation to get their own renter's insurance.
Okay, Chris. So, the big thing now is bundle and save. Bundle and save.
Yep.
But are there any exposures that we could be exposed to even when we think we're bundling and saving?
Essentially, bundling just boils down to putting, the products together, like the home and auto. So a lot of times if you bundle the home with auto, you're going to get some additional savings. So that's not really a pitfall from that standpoint. It's just another feature to, help lower the premium for your home and your auto.
What is the issue with relying on life insurance just at our job and not getting our own outside the job? What's the challenge with that?
The challenge is with that, the first question I ask people is your insurance portable, meaning are you able to take it away? So I tell people all the time, take what your company gives you, but you need to get your own, whether it be term, whole life. We'll just have a discussion either with myself or my financial specialist. We'll talk to you to find out exactly what your needs are to make sure you get the right product. But you need to have your own policy outside of the company because, once again, probably 99 times out of 100, once you leave that company, that insurance doesn't go with you. So you want to make sure that you.
So actually, the policy really theirs.
Yeah. It's theirs, right?
Yeah.
It's a good benefit while you're there.
Yeah, I get that, but when we leave,
once you leave,
adios. You don't take this.
You don't take it with you. Exactly.
So, what could be, what would you consider too late to get life insurance?
It's never too late.
Okay. Then what happens if somebody's health changes?
Well, let's back up. So it is beneficial. I was just messing with you. It is beneficial to get the insurance when you're younger.
Okay.
Because usually when you're younger, you don't really have any predisposition for diabetes, high blood pressure, things like that. Of course, as we get older, those things tend to kind of come up on us a lot of times. You might end up, older you get, might end up getting hypertension and high cholesterol and things like that. So the benefit of getting it early in life is get it before all that stuff happens because it's going to make it cheaper. And then the younger you are, the cheaper it's going to be as well, from that standpoint, especially from a term policy. And then two, I think I'll talk to you about this before. I got some life insurance policies for my granddaughter. She's 2 now, but when I got it when she's probably like 5 or 6 months old, and people are like, why would you get an insurance policy on a 5 or 6 month old?
First of all, Chris, why do we think like that? And then, what was your reason behind that?
Well, I mean, sometimes it's a cultural thing. People say it's creepy to get insurance on a kid like that. But the reason you're getting that is not because you think they're gonna die. You're getting that insurance policy because it's gonna go up over time. The policy that I got for my granddaughter rather. She turns about 18 or something like that. It'd be close to like 200, 250. When she turns 30, it's gonna be close to 600, 700, and then when she gets older, like 40s, it might be over $1 million.
Really?
Yeah. So that's the reason. It's about amount of money that you put into it. Everything's not gonna be like that. But that's the reason I did that because like when Papa's long and gone, the big thing for me is the L word, legacy. I want to leave a legacy. So when Papa's gone, she like, Papa might be gone, but I got paid, because I'm still there from a financial standpoint for not just me, but her Gigi as well, to know that we were thinking about her from that standpoint.
So Chris, this is what I want you to do when I share this with you. Because you look at the third camera to the left, but But for someone who has not reviewed their policy, in the past 6 to 12 months or longer, like what would you say to that person? What would you want to share with them that they may not even be aware of?
Well, I mean, to do a policy review, it didn't cost anything first and foremost. So if you're with another company and you come to me, I'll take a look at it. It might be a situation where, once again, like I told you, I might have something that might be better for you from a financial standpoint and coverage standpoint. But it's nothing to lose because if I don't have anything, me personally, I will still look at your policy and tell you what you can tweak to make the policy that you got where you are even better. So that's the key right there.
So for someone, who wants to get a free policy review, and I think you're the only one who ever says it. Everybody else say, quote, or they'll put out there, get a free quote, but yours is totally different. You really are reviewing the policy.
I'm reviewing the policy.
So, what should they do next? Do they schedule an appointment with you, or they can just go online and schedule?
But once again, if it's on social media,
right,
on my business card,
right,
everywhere,
your telephone number.
My cell phone, I put my cell phone number is 214-870-4269. 214-870-4269. And of course, it's Chris Zeigler at Allstate.com, as well that I can be reached there where you can email me. But just give me a call. I like running my mouth. I like talking to people. I got the best job in the world. I like to talk. I like to talk to people. I like meeting people. I genuinely like people, some people don't really like talking to people, because you got all this AI and all these other different things. I'm old school, I have the technology with my business card on my phone, but I'm still old school. I still pull out the old school card and hand it out. But I have all the modern technology stuff too, but I'm still old school.
One thing I do want you to share is your heart for the community.
Mm-hmm.
Why do you, do all these different drives, within the community? Where does that come from?
I mean, just where I was raised, being a Christian, people always talking about socialism and social. I said, Jesus is probably the big socialist out there, So I just got a heart for helping people. And I use my business as my platform to do that. I do 4 different drives a year. The first quarter, I do the coat and clothes drive. The second quarter, I do the personal hygiene products, cleaning supplies, and non-perishable food items. The third quarter, I do the back-to-school supplies and backpacks. And then in the fourth quarter, I repeat the second quarter where I do the personal hygiene products, cleaning supplies, and non-perishable food items. You always hear me say this all the time. Do everything that you're going to do at Christmas. Do everything you're going to do for Thanksgiving. But people need help all year round. So I think it's very integral that, we take care of our fellow man, from that standpoint. And I think that's huge. And it's funny. Some people don't even realize I'm an insurance agent. Some people think I have a nonprofit. And they're like, you got a great nonprofit. I said, I don't have a nonprofit. I said, this is just something I do philanthropically out of my heart. And somebody said, you need to set you up as a nonprofit for all the stuff that you do. But I hadn't gotten to that point yet. And I try to help out different organizations as well.
Chris, speaking of that, why is it that so many realtors like working with you and mortgage professionals? Mm-hmm. I mean, like because I see it like, when you do your networking events, like the moment you put out a networking event, prime example, because I say, all right, Chris, this time we're going to have a registration because typically, they show up. When we put that event out there, it was like 20-some people signed up that night. I mean, I woke up the next morning, I had all these emails. I'm thinking it's my event. So what is it about Chris that realtors, mortgage professionals, people who do home repair, why do they enjoy, doing business and referrals with you?
Because I'm sincere and I look out for their best interests as well. One thing that's different for me from most agents, I understand the home buying process from, like you said, from mortgage to real estate to, title. I understand the whole gamut of how the home buying process works. A lot of agents understand how the home buying process works, from that standpoint. So, and I have a heart to make sure that we're taking care of the customer first and foremost. And hopefully I don't offend anybody by saying this, but insurance is the bastard child of the home buying process. People don't realize probably the first person a realtor should call after they get a client is the insurance agent for several reasons. We do a clue report. So a clue report is kind of like the background information of the house. If it had hail damage or pipe burst or anything that happened with that house, that's number one. Number two, you want to talk to the agent as well because you want to make sure that you're putting your customer in the right area. Because I've seen some agents, I've educated. I'm big on education. I do, financial literacy classes for customers or potential customers, and just for the general population. I do home buying seminars for realtors and mortgage people as well to make sure that they're looking in the right area because a house in Prosper, the same exact house in Prosper is going to be cheaper over in Forney, So in DTIs with debt to income ratio. So you want to find out on the front end because sometimes you wait until the very end. It's potentially you can lose the deal for the customer and yourself where you're not going to get paid and then that customer not going to get their dream home that they were looking for.
NARAB, why are you so adamant about NARAB and share what the letters mean for NARAB?
NARAB is the National Association for Real Estate Brokers. And just kind of quick overview, NARAB was actually started in 1947 because back then, African Americans or people of color could not be a part of the National Association of Realtors.
Really?
No. And people don't realize, I think, if I'm not mistaken, people of color weren't able to be a part of the National Association for Realtors, if I'm not mistaken, until like maybe the early to mid 70s.
So that's not haven't been that long
It
ago.
hasn't been that long, and it was a group of 12 people that met in Tampa, Florida. In fact, A. Maceo Smith, which is in the federal buildings and schools are named around there, he's one of the key founders of that organization. And it was for us. When I said us, I'm talking about people of color, black people, people of color, and we call ourselves Realtors. And somebody said, what's the difference between a Realtist and a Realtor? A Realtist, of course, first and foremost, is us, the people of color. Mm-hmm. But two, Realtors can consist of anybody who touches the home buying process in any shape, form, or fashion. Insurance, of course, realtor, mortgage, title. Because you do stuff with realtors, you do stuff with realtors as well because of your social media, your social communications. Some social media communication stuff that you do. Mm-hmm. If somebody cleans houses, takes pictures, home inspectors. It's the whole gamut. If you touch the home
every touch point,
no matter what you do, whatever touch point. And then we have people who might not be a part of the home buying process, but we encourage people who just want to learn more about home buying process, investments, and things of that nature. We encourage them to come out as well to join. You have 3 chapters here in the Metroplex. I'm on the board for North Texas, but I'm a part of the Dallas Association for Realtors, DAR. In fact, they got a meeting this coming Friday at the Luby's in Hampton Road in South Dallas. And then North Texas has one next Tuesday. They meet every third Tuesday of each month over at Jake's in Frisco. So wonderful organization. You can learn and find a lot of different things about the home buying process and the educational things that you learn as well. You go to these different meetings that we have. We got TARAB coming up. It's the Texas Association for Real Estate Brokers. It's going to be June 11th through the 13th. My birthday's on the 11th.
Shout out to Chris on the 11th.
But I'll be there. That's how important it is. I'm going to be there for my birthday because it's an important event that people the general public needs to come out and check out, especially all realtors and anybody who touches the home buying process in any shape, form, and fashion.
So can anyone join the organization?
Anybody?
Anybody.
Yep.
So if you're a homeowner, you could join the organization.
You're a homeowner, you can join the organization.
If you're not a homeowner,
or if you're somebody, like you said, you're trying to find about investments,
right.
Things of that magnitude. We have you get so much knowledge and information, and it's just a plethora of people there with just, years and years of experience, and you basically can bounce stuff off of different people, different ideas, and just kind of get feedback and just get a deep understanding about whatever particular industry that you're in. And you always hear me say this all the time. I say I believe in collaboration over competition. Mm-hmm. And what I mean by that, although I'm an insurance agent, I want to make sure that a person has the best outcome that they can get. If for some reason I can't get them, I want to make sure somebody I know can help them out as well, because I want them to have. It might not be as good as me, but they might be pretty close. I'm not going to refer you to, as they say back in the day, I'm not going to refer you to no buster or nothing like that.
Right.
But it's going to be somebody who's going to be sharp. I know can take care of you if the product I had didn't match your needs.
Wow. Mm-hmm.